Welcome back, viewers. It's time for Markets Daily, and I'm joined in set by Anisu Chimbumo, an investment analyst, one of our own. Anisu, good evening and welcome to the show.
Thank you, Eben. How are you doing today?
As usual, won't complain. You don't get better yourself.
I'm alright. Had a good holiday. Hope you did as well.
Sure did. Beautiful, beautiful. Let's get the ball rolling onto the markets.
Now, coming from a very strong week in the prior week before the holiday, the Easter holidays and the Independence holiday, we had signs of a strengthening demand within the stock market, and that seems to have continued in the opening session of this current week, with the all-share index and industrial index mimicking each other by inching up by 0.19% for the all-share index to settle at 126.52 points, while the industrials index settled at 422.3 points. The top 10 index did go up 4.48% for it to settle at 120.37 points. Now, that increment is still very much evident of how the top 10 index has been pretty much a huge determinant of how the stock market has been performing in the prior weeks. If we just have a quick look at how our 5-day trends look like, you would notice that the top 10 index is ahead by about 1.08%, while the all-share index is ahead by 0.8%, and the industrials index is up 0.87%. The miners index is down 2.84%, pretty much because today it was stable. Today it didn't make any major movements in the past three sessions, dating it back to about last Monday. It's coming from 192.23 point level for it to be 2.84% down on a 5-day trend basis. So your top 10 index still shows that it's got a strong influence in the stock market. A lot of foreign investors are pretty much selling off for them to exit the market, using counters such as Old Mutual, while local demand has been coming up. I mean, value today was up 60% in terms of value traded on the stock market, finding most of our rises being top 10 counters, while the laggards of the session, which were actually 6 in today's trading session, were mostly counters that you would find in the all-share or industrial index. Now, OK was the leading bull for the day, coming up 3.17% for it to settle at 22.75 cents, while Old Mutual did settle at 852.1 cents for after having added about 2.03% on its prior sessions trading level.
Of course, Old Mutual released their financials just recently, with, of course, a positive outlook of interesting prospects that actually lined up in terms of digital innovation, as well as an intention to actually move into other businesses like tourism and the like.
Yes, and with them trying to move into tourism, it should be improving their earnings. A lot of businesses, especially property-based businesses, you look at your ZPI, you look at your African Sun
First Mutual Properties, Marsh Holdings,
exactly.
It's across the board.
Those guys are moving more into tourism properties. Marsh Holdings never really had any tourist attracting properties or areas that they were dominating in that region, but they've begun to move towards that line. I mean, there should be some expectation for the tourism sector to begin to improve, but then that also depends on an improving economy, where you should have some sort of good ratio between your local and your international visitors for your tourist attractions. But it seems as if our local tourists tourists are not very keen or do not have a very strong demand in that region. So it may be a very tricky situation. I mean, IMF is expecting a recession in the country. We as a research institute are expecting a recession as well. So it shouldn't spell out much growth in the tourism sector going forward. I wouldn't know much, but these are just projections. RTG now, tourism related counter was the heaviest loser today, actually leading that pack of laggards by after having lit up about 19.66% for it to settle 2.33 cents. We should be expecting an analysis briefing in the next couple of days or just about a week from now. There may be some improved numbers coming there. I mean, we did enjoy a good tourism year in the prior financial year. Now South Africa did lit up about 9.09 cents, while Meikles, Willdale and Econet did cap that set of fallers, coming off 5%, 4.98 and 2.58% in that respective order, for Econet to settle at 104.98 cents.
Well, then on to how it has played out on the interbank market system.
Well, coming out from the holiday, the interbank market rate has weakened again, selling at about 3.22 now, while the old mutual implied rate has also weakened, consequent to a widening disparity between the local market, which did go up, versus the JSE market that did come off, landing that old mutual implied rate to about 4.24%, 4.24 per dollar. While we have the parallel market also weakening to about 4.85. Most traders are trading in the regions of 5 to 5.50 per dollar. Now we would have to discount that, implying the fact that there is an issue to do with a charge that is put on RTGS accounts, which is your EcoCash, to actually withdraw your EcoCash amount to become a bond note. So that charge is around about 15 to 18% at the current moment. So that charge then discounts what the parallel market rate stands at, as we do like to work with an average between all three kind of rates that are used on the parallel market.
Well, thank you, Ernest, for the perspectives. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. From Anesun, I, Danki, and Asante Sana.